It was the best week of the year for oil prices after rising today for a fifth straight session. Domestic crude up more than 8% this week as crude and gasoline inventories fell more than expected, and Saudi Arabia said it would reduce future oil output. That alleviated some oversupply concerns. But the price of oil varied widely in the second quarter. That hurt ExxonMobil's results, but not doing much damage, really, to Chevron's quarter. Shares of the country's two largest oil producers moved in opposite directions. Chevron, the best performing Dow stock today. Exxon, the worst. Jackie DeAngelis has more.
Investors weren't expecting much from ExxonMobil. That's why this earnings miss really stings. The wide range in crude prices is partially to blame, even though they were higher than they were a year ago. The other reason is weak performance from Exxon's exploration and production business. The downstream business, that's refining, was stronger but weak here in the United States. CEO Darren Woods said the company's job is, quote, to grow long-term value by investing in our integrated portfolio of opportunities that succeed regardless of market conditions. Since Woods took over on January 1st, succeeding Rex Tillerson, who is now Secretary of State, Exxon has faced accusations of sanctions violations, probes into whether the company hid data on climate change, and questions about how it would grow oil output. It's a slightly different story for rival Chevron, the second largest U.S. driller behind Exxon. It swung to a profit thanks to higher than expected output from its wells, even as returns from its refining business shrank. What will be key for both companies is how they proceed going forward. With oil just under $50 a barrel, do they keep drilling or do they pare back and allow prices to stabilize? The U.S. is the swing producer right now. For Nightly Business Report, I'm Jackie DeAngelis.